Okay, good evening to all, and I hope you guys can actually hear me clearly. And do type it onto the chat. Just let me know that you can hear me clearly, and we shall then start today's weekly webinar. I'm just going to be showing you my screen at the moment. Let me just check on attendees at the moment. We'll just get going in about 2 minutes or so, guys. Okay. So I would like to thank the ones who are already here. Thank you for coming. Very good evening to all. Okay. We'll just start in about 1 minute, guys. Today is the 24th of November 2015, and you are at today's Geometric Trading Live weekly analysis, organized by Orbex, and my name is Kenny Simon. Okay, I'll introduce myself again in about a minute or so. Just make yourself at your PC, at your computer. And if there's any questions meantime, I'm able to take them as well. You can just type it on the chat. I see some questions, private questions coming through as well. So feel free to ask me if there's anything so we can address them or answer these questions in the meantime. Okay, hi Giza. Good evening. Is it echo? Okay. What about Abdullah? You hear me clearly? Because I would like to check with the rest as well, just to see whether it's at your end or it's my end. I'm going to move my mouthpiece closer. Hope you can hear me better now. Any more echo at the moment, Giza? Okay, Abdullah, you can hear me clearly. Giza, do you have any radio devices or your mobile close? It might interfere. Seems to be clearly. It seems to be clear on most ends. My voice. The room. Ah, I see. Have you got a headset, Giza? If you do have a headset, it might actually help. There's still an echo. Okay. Fidela, welcome. Good evening. So there's still an echo here. Maybe you want to look at having a headset. Because as for me, I'm trying my best at the moment. Let me see what I could do. Is the volume? Is the volume okay? Do you hear me okay? No, Abdullah, we are going to be discussing analysis based on geometric trading. I'm going to be giving you some signals, as you can call it, or some analysis based on what I've gathered throughout the week. We are going through live trading, analyzing the markets using geometric trading methods. So I'll draw out some patterns, and just to let you know about current market situation, what patterns that I came across, and in terms of the trend, maybe not so much on pivot point, but there's some mention on support and resistance levels, if that is something you're interested in. Volume is good, brilliant. Okay, still echo, yeah? Is it still echoing? Okay, sorry about that, guys. I'm trying my best at this side of the room. Just give me a minute or so, I'll adjust. Give me a second. Okay, I'm back, guys. I hope the sound is slightly better. Okay, still echoing. All right. Okay, I think we can start. There's nothing much that I can actually do at my end. I've tried my very best, but we'll see how we get on as time passes by. Hopefully, it'll be better. It's better. Brilliant, Abdullah. Thank you very much for that. Okay, so let's start at the moment. Okay, let's start straight away, and I would like to say good evening to all and welcome to today's webinar. And it's the Geometric Trading Live Weekly Analysis with me, Kenny Simon. It's organized by Allvex, and we're looking at the market. We're diving straight onto the platform, onto a live analysis using geometric patterns. That's what this webinar is about. Okay, so without further ado, we are looking at the Euro USD. But before anything else, I would like to just mention a little bit about the market status or the market's condition at this very moment of time. Okay, there are two factors that are actually governing the risk in the market for not only forex traders, stocks, and equities, commodities, and all that. So, two very important factors for this whole week would be the subject of geopolitical factors. As you could hear the news and all that going on at the moment, there are security issues, as you know, in Belgium and other parts of Europe. You've got all these issues with what's going on in the news, so that will be covered under geopolitical factors or issues. Okay, and that is factoring the risk at the moment. So we are looking at this as one of the main factors. Secondly, it would be affecting liquidity. Now, liquidity would actually be lowering, and that also means that because of the geopolitical factors, we've got investors looking at the risk side of things. They're actually they will be lower number of investors or amount of investors, and that will affect the volatility, the liquidity, not volatility. So volatility, you can actually still expect volatility with spikes and all that, but with the liquidity that is actually low, that would pose more risk to the market. So why I'm saying that is in summary, this is a red alert for us to be careful with our stop losses. Okay, be careful with the risk factor of things due to what's going on in the market. Okay, yes, I think I was just moving about a little bit just to grab a pen and paper. Okay, so I think it's okay now. I'm put at my desk at the moment. Okay, is that okay now? Vaitautas, yeah. Okay, yes, Abdullah. I'll speak a little bit about gold as well as I'll cover a little bit on gold and oil. Oil hit the target based on geometric pattern as of yesterday, so it was good news. I'll draw up the pattern for you. Okay, brilliant. So everything is set to go in terms of the sound and everybody can listen to me. Okay, that's good. So these are the two factors that I would like all the traders to be aware of, okay, because we are, I'm looking at the news as well. I'm looking at behavior of traders. Traders are talking about all these news factors and things like that. But if you're looking at from an institutional point of view, they are having two flags on liquidity, lower liquidity in the market at the moment, as well as geopolitical factors. Okay, so we want to be a little bit more careful. We want to be more, how do you call that, conservative with our trades as much as we can, especially in this period of time. Okay, now with regards to that, let's look at the behavior of currencies and using patterns and whether or not we could actually gather some formation of pattern that would actually sink in with what's going on in the market geopolitically or economically, or what we hear from the news and things like that. Let's start off with Euro USD at the moment, and we're looking at the Euro USD. As you can see on my screen, it's on the 4-hour chart. Now, the 4-hour chart, as we have continued the last time on the 4-hour chart, you'll notice that I always have my 3 indicators. The moving average is exponential on my chart. Now, this is crucial in my approach in knowing the trend, because we would like to know whether the trend is your friend or make the trend your friend. Okay, so so that's hence I've got the 3 lines. The 50 moving average or exponential moving average, we've got the 100 and the 200. So these are the 3 moving averages we've got. Now, just looking at it visually, I would like to just zoom out as much as I can first. Okay, I'll start off with my daily chart. Okay, as you can see, just zooming out, you can see from the far corner on the left, you've got all the prices have actually plunged for the euro versus the dollar, okay, since some time ago, back last year, and you could see that we've got some corrections going on, trying to go through the 50 and 100, but didn't go past here, the 200 moving average, and then you'll see that it started to just spike upwards, piercing through the 200, but have not actually really gone through it. So what does that mean? It's got some resistance in this area here. I'll just give you some hint there. So we are looking at the resistance zone there. So prices have not really pierced through that zone, have not actually gone through there, have not gone past the 3 moving average. So what does that mean? That means that the strength is more, it's still more to the bears, okay? Because now if we zoom in, for example, you get a better picture. You're looking at prices for the euro. They are all under all 3 lines. So what does that mean? If candles, majority of the candles are traveling south or downwards towards the floor, and they're actually far away, quite far away. The further away they are from the 3 lines, the stronger that trend is. So the trend, the downward trend, is fairly strong for the Euro USD. In terms of the angle of this last trend that you can see, this last wave or last leg, if you want to call it that way, is actually very much at a 5 to 6 o'clock angle. If you're looking at your watch or the clock, it gives you a very strong hint that it's actually traveling southward rather strong. So that means the bears are dominating at the moment for the Euro USD. Okay, how the EMA again? Okay, sure. I'll explain about the exponential moving averages. What you do is it comes under moving average. I have inserted the 50, the 100, and the 200. For me to actually insert the first one, all I do is I go into insert under indicator, and you've got your under trend. It comes under the category of trend indicators, and you've got your moving average. Okay, then you start off with your 50 first. Okay, you can change and put any color you want. Make sure your NA method here is exponential, and you apply it to close, and then you click OK. Then you've got your 50, and then you open it up again and you click on 100. Okay, right? Make sure it's exponential. It's still on close, and you change the color again and you click OK, and then you apply the third one, which is 200 EMA. Same way, you leave exponential, close, and you change the color, just so that you know which line is for which moving average. Okay, so that's how you apply that, and then you'll end up having 3 lines. So the 3 lines will give you sort of an idea of the trend. Okay, all right. Okay, thank you, Abdullah. Okay, so once that's clear, we start off the daily chart. Let me just travel to the 4-hour chart, and what would you notice at the 4-hour chart? You would see that it's the same thing. You've got prices they have at one point tried to pierce through that 50, didn't quite reach the 100 or the 200, quite far away, and again it's tried there a little bit, but still it's under the three lines. Now the other hint or tip using the moving averages as you can see on my screen, is that you've got the 200, the 100 as well as the 50, and they're all actually quite far apart from each other. They're traveling very nicely, like a river flow. They're not entangled or they are not touching each other. They're actually quite far apart and traveling downwards. Now that's a good indication that the trend is quite strong on the downside. Now that's for the 4-hour chart. And then if we move to the 1-hour chart, let me just increase that. As you can see here on the shorter time frame, because it's on the 1-hour chart compared to the medium 4-hour and the longer time frame daily, you can see that for the shortest period of time, we are looking at some efforts of prices trying to pierce through the 50, 200. It did try and it succeeded on the 50 a little bit, and then it touched, and again you've got resistance there trying to force price downwards. And again, it showed some effort, but not a change of trend to the upside. So in summary, for the Euro USD, we're looking at more downside move at the moment. Now, in terms of pattern, there is definitely bearish type pattern that I have also detected at the moment. So we are looking at very close to a Z pattern here, but I'll draw out, I'll just explain because I'm doing the live analysis right in front of you at the moment, but do question me if I'm going too fast, okay? At the moment, because it is clear that the downside move or the bears are dominating the market at the moment for the Euro USD. I've pulled from the top to bottom the Fibonacci ratio. Okay, why from the top to bottom? Only because the trend travels downwards, and I'm pulling from top to bottom, following the movement of candles going down. Okay, so I've clicked from that end. You could go anywhere actually, as long as that yellow line, as you can see, or any colored line for the Fibonacci hits on there. Okay, some people actually pull it from the body. Some does it from the wick. I do it on the tail of the wick usually, and I drag it all the way down here. Okay, so prices went down and then it tried to go up, okay, came down here again, and it started correcting itself very close to 38.2 moving average. 38.2% of the Fibonacci. Okay, and it also tried to go into the 100 and didn't really manage to go upwards. Okay, so what are the patterns that we have seen recently? If I go on to the daily chart. Sorry, we go to the 4-hour. Oh, give me a second. There are more questions coming through. 50 EMA and 100 EMA. Yes, it's 50 EMA, 100 and 200. Okay, they are all EMAs applied at close. Okay, right. Okay. There we go. So the same EMA that you see, I mean, if you're looking at the news usually like Bloomberg or CNBC, and you see that these EMA are largely used, okay, to a large extent. They apply these EMAs onto their charts. Okay, personally, Abdullah, you focus on the 38%, 50% and 61% as your target. Okay. That's interesting. Let me cover that part there for you. Okay. Usually, if for me trading with a geometric pattern, I like using the Fibonacci ratios of 61.8%. Okay, and the 78.6% as my high probability ratio. Okay, is what I've typed there. Now, usually you want to look at where the correction is. Now, let me demonstrate something to you. Let me just make this one smaller. Okay, now let's say, for example, we'll ignore all this pattern for now, and let's just concentrate on a pattern that I call it an ABCD pattern, let's say. Okay, now if I were to focus on that move right here, it started to correct itself onto the 50 moving average. I would like to just pull my Fibonacci from the top to the bottom, and I would like to look at where did it actually correct itself. Now here it corrected itself, or it touched onto this 70.7%. 70.7% ratio. Now, usually what happens is, not all the time, not 100%, but if it's 70.7%, you want to look at the Fibonacci. If the retracement is 70.7%, then you want to look at the extension. You want to pay more attention at the 1.41% extension level. Okay, I'll explain what this means. Okay, give me a second. And I'll demonstrate to you the geometric pattern that you can actually draw out of this just using this piece of information. Okay, so what I meant by that is, let's just start labeling pattern first. Okay, I'll start with A. Okay, oops, sorry. A, right? Let's say if I start with A there, okay, then I've got my B here, okay, and the next step is I would like to look at that point there as my C, okay. So the C point in trading the geometric style approach would be very, very important for me to look at where did the C actually landed. As you could see earlier on, if you've noticed, I've dragged the Fibonacci from A to B, and I looked at C, and C landed at the 70.7% ratio. Okay, so what we would like to do now is, if we were to forecast for prices to fall further, the question would be where or how far could it actually fall more. So we are actually predicting where D would be actually going. Okay, where could D be? Okay, so that's the D point. So that's the black canvas there. We don't know where. Okay, so just with Fibonacci, as I've mentioned, because C has gone on to 70.7%, one way of predicting D is that the D could reach 1.41% of BC. Okay, give me a second. Let me just answer the question first. Okay. All right. Still echoing. Okay, now it's better, Fidel. Thank you. All right. So now we're trying to on the live market predict where D could actually go. Okay, D could go anywhere, right? But one of the ways is to pull your Fibonacci from B to C and look for the 1.41% extension. Okay, so I'm pulling my B to C. Right? Let me just remove these lines to not complicate you. So as you can see, my 1.41 or 1.41% extension level, Fibonacci extension of B2C is right here. So I'll just mark it here with a horizontal line. Okay. As you can see, it's given you a hint that prices, if the bears dominate and the downtrend persists, it could reach at that level there 1.0556 or 1.0557. Now I'll remove that. Okay, so that's where my D could roughly be. Okay, but let me now draw out the pattern, the ABCD pattern, or some people call it the lightning bolt pattern. So I'm drawing my first leg of A to B, correct? Now, usually in the geometric pattern side of things, we also look at AB could equal CD. So that is the second way of predicting. The first way, when we put in the Fibonacci using 1.41%, is number one prediction or number one forecast. And then the second way is you pull your A to B and you double click that, okay, and you move it right down there. Okay, as you can see, it has, very closely landed to where we have predicted firstly where the D could actually go. But then you've got it coming out there a little bit. So what we do is we just mark the end of the C to D leg like that, so you know that it could actually, prices could potentially, if it were to fall, to actually reach either the 1.0556 level to 1.0547 level. Okay, so now what I'll do is I'll mark my A to B. Okay, mark my A to B like that. Give me a second. Excuse me, I've got some more questions coming through. Okay. All right. Okay, hi Zach. I think I've got more questions here which I've missed. What's the extension of the price? If the probable extension, if it is 61.8%, usually it's 1.618% extension. Okay, right. That's a ratio for that for Vitaltus. Zach, is it still bad, the sound? I'm very sorry for that. I guess the rest could hear me okay, but Zach, is it still bad? I'm trying my best here. I'm not sure what I can actually do at my end. It seems okay for the rest. Okay. Fidela, you've asked me about resistance for the Euro USD. Okay, let me come back to that. I'll just use this analysis now and explain better. It is still an echo. Very sorry for that, Zach. Hopefully you don't have any mobile devices or anything near you. What about the rest? Do everybody could hear me clearly, or is it still echoing? All right, I'll just carry on with the Euro USD for a while. Meantime, waiting for your response on the sound. Okay, so that's roughly what we're looking at the moment, where prices, if persist to go downwards, would actually reach at that level there. Now, I've just drawn the A to B leg and the C to D leg. Okay. Yes, of course, Abdullah. We'll go straight to gold right after Euro USD, okay? And also oil if you want. No problems. We'll do that. Okay, so we've got Euro USD, and what we can actually do then is I'll just cross out this way. Now, for those of having sound problem, I think this session or webinar is recorded, so it'll be available on YouTube very shortly. We'll try to make that available as soon as possible, so you would be able to still go onto it and have a look, have a listen. Okay, so look at what I'm doing. I'm just attaching all the lines, and that would then be a big help to producing a geometric formation for me. Okay, you could call it a diamond shape or a kite shape geometric pattern, but from the ABCD, that's what we could actually easily get. And once we've done that, you would notice that you've got a center point here. Now that center point is actually quite a unique center point because if I were to draw a horizontal line using that center point, that could be, if you could see, it's automatically a very strong resistance and support level here. So you could see many touch point and support here. Okay, and this line here, 1.0689, could also be your potential or probable entry point for your sell earlier on. When you want to trade from C to D, and you probably ask where would you enter. Now that would be the answer to your question, that it's a probable entry point to trade between C to D on a sell, but you can actually enter anywhere close to that line there, or under that line would be a safer touch. And you can see that prices have gone down here, started to go up, but then very close, to that resistance level there, and also it's touching the 50 moving average. So that's a strong sign that prices could easily come down again and hopefully touch our TP or take profit level closer to this zone here. So that's how we trade using a simple geometric style trading method. Give me a second. Excuse me, I've got more questions. How do you define the CD line? Okay, I'll go back to that. And we will go into gold, Abdullah, definitely, right after this, okay? The C to D, if I were to take that, let me just remove that, okay? I'll remove this too. Okay. As you can see, this is called an ABCD formation or pattern, okay? The C to D line is actually the same length as A to B. So all you do is you draw the A to B line first and you double click and then you drag it right there. So in geometric trading, because the C point is quite significant, it has landed very nicely on the 70.7%. It could land at 61.8% or the 78.6%. And if it does touch very nicely, it's quite a high probability pattern. Okay, so if it does work that way, then you can easily draw your A to B and you drag that A to B starting from C. That means your AB is equal in length with your C to D. Okay, I hope that's clear. All right. Okay, Zach. Thank you for that. All right. Also, because it's recorded, you can always, play back and listen to it. And meantime, at any moment of time, you can easily send me an email. I'll be happy to answer your questions again. Okay, I can send you screenshots as well. All right, let's move on to gold. Let me just see whether I've got gold here. Right, okay, gold was a very nice trade, to be very honest. I know it's been a very risky trade for a lot, but with the formation that I have seen quite some time ago, we're looking at the daily chart for gold at the moment. Give me a second. Hi Fidel, I'm not assuring anything. It's just it is a probability game, as you know. It's just a forecast. I mean, looking at the trend, the strength of trend for the Euro USD, it does look like it's favoring the downside. The main reason is not that it wouldn't correct itself also, but as of now, from 3 time frames or the short, medium, and long term, we're looking at the strength of the bears. We're looking at the strength of people selling much more. Why? Because we've also put on the inserted the indicator, the 50, the 100, and 200, and we're looking at a very high possibility of it still traveling downwards. Okay. Also, we're looking at you've got factors, political factors as well. You're looking at things about Greece again, looking at certain factors about the European countries as well, where you've got security issues there. So that might actually impact the downward move more than an upward move. But it doesn't mean that it wouldn't reverse. It just means that the trend as it stands, it's favoring the downside. Okay. So let me just type that. Okay. All right. Where do you think short target will be based on daily gold chart? Okay, Abdullah, you're a gold trader. I can see you're a very serious gold trader there. All right. Just for your information, on the daily chart, way before we've got a formation. I call it sort of like a W pattern formation. Okay. Now this W pattern formation that was detected here, as you can see. That W formation. Usually at around there, the market is expected to fall, and it did actually fall. And as you can see, you've got a daily on the daily chart or the longer term. You can see trend-wise, it's under all three moving averages as well. And it's very far away from all three lines. Of course, I want to look at whether or not we've got potential for it to reverse very soon or not. Now, one way of doing that, first, I would like to remove all my horizontal lines. Okay, there may be a possibility of a how do you call that? A lazy Z-like pattern here, which means that the prices are actually falling. I'm looking at the daily chart, but we'll go on to the 4-hour and the 1-hour shortly. I'm looking at the fall here. Now that fall started here. That fall started here, but you've got an upward move there. Okay, so what I'm expecting for it to happen is if I pull that up there, I'm looking at the potential of a reversal at the 141.0 or the 161.8, but it's hinting that it could easily, if it were to actually fall more, it should cross that line there and target this 161.8 level here. Okay, so this is the zone that it could easily reach. Okay, but in order for us to confirm that, we need to look at levels. We need to look at support resistance level as well. Now, if I were to do that, okay, zoom out, I could see that we've got a support level there. Okay, it's quite close to what's going on here, but I would like to zoom in now so that we can actually look into it closer. Now, if I've marked that earlier on two levels, 1.41 and 1.618. Okay, now these are called the risk level. Okay, so that means that if it were to go lower, if prices didn't manage to actually go up from this point, it started to come downwards, it might actually reach this level here before it start to make an upward trend. So at this moment of time, looking at the trend on the longer term and the medium term, as you can see, okay, and also the hourly chart, okay. Now, on a short term, again, you can see that it's tried to pierce through the 200, but it didn't manage to. So it shows that there are quite strong resisting happening in this area. Okay, and it didn't manage to go through 200 EMA either. There's some resistance happening, and you've got a high here, but a lower high here, and a lower high here. So it's signaling some strength by the bears. And then if I move on to the 4-hour, it's the same thing. Okay, you've got more strength on the bear. See, it's actually still resisting here. So again, it's quite close to what the Euro USD is doing. It's actually having more strength on the bear, so a downtrend. So if it does, then it might reach to either one of these red horizontal line as your TP level for the downside as opposed to the upside. So this is the risk at the moment. The risk is for you not to look into too much possibility of an upside, okay, but more on the downside. But if it does actually move to the upside, I do, give me a second. Okay, sorry, Vitautas. I'm not moving away from my microphone, but I'm putting it closer now. Hope it's okay. Hope it's clear. Okay, I'll start again. All right. Now, if I was looking or looking at the 4-hour chart and zooming in, there is a potential of an upward move only if it starts to go above the 50.60 onwards and above, or if you see the candle starting to pierce through the 50 and it starts to go upwards, then you might then say that there is a potential of a W-like pattern. Okay, I'll draw up that pattern for you first, so you get to see what I mean. This is not a certainty. I'm looking at lots of risk factor for the goal, meaning that I'm not looking at it suddenly rising as much, and changing the trend as a whole. But I could see a possibility that it rises only as a correction and it wouldn't rise too much as yet, because the dominating trend is actually a downside. Okay, so I'm drawing for you now a W-like pattern, which is a bearish sort of pattern. So I'll explain what I'm doing at the moment. Give me a second. Okay, oops. Let's go back to the 4-hour chart. Okay, now I'll draw the pattern out and I'll explain what I mean. Now this is a sort of W pattern. Okay, it's made up by a big move downwards here, and then you've got an ABCD pattern here, A, B, C, D. Okay, so that is my X up there. I've got an A here, B up here, C, and then D. So what does that mean? That means that now I will be using the W-like pattern. I'm expecting prices, if it were to pick up in strength, to actually go upwards, okay, and reach that level here. Why would that be that level here? It's because I'm taking the first option of AB equals CD, you see, so that's my AB earlier here. I'm taking that as similar in length, and then I make a sort of forecast that it might actually reach there, okay. But if I am looking at, first of all, I would like to insert an indicator that's called volume. Of course, now we're just, this webinar is more an analysis site, but if you're interested in signing up to know exactly how do we actually draw these patterns from step 1 and 2, do sign up on our webinar on Geometric Pattern Series, which will be emailed to you guys to inform of the upcoming event. Okay, but I'm just looking at a possibility. Okay, I'll explain in the forthcoming webinar why I've inserted the volume indicator. There are reasons to what I do to confirm whether or not it's a high probability pattern. Okay, so from the look of it, there is a possibility or a probability for prices to rise up and start coming down there. But I'll just label this pattern first. Okay. Let's label this pattern as X. Okay, right. And then you've got an A. I've got A here, yeah. Okay, all right. And then, oops, let me label. I think I've got questions coming as well. I'll just get to that shortly, right after I've labeled this pattern. Then you've got an XA there, and then now what I'm doing is I'm going up to this peak here, and I'm labeling my B, the B, okay, right, and then C right down here, so it's clear for you guys. This is how W pattern looks like. It starts off with X and then A, B, C, D, okay, so C, right. And what we're doing is we're predicting B, Okay, we're wondering where D would actually go if it were to rise up. Now that's what Abdullah would like to know as well, I guess, yeah. So if it does actually, now this is not a change of trend, so I wouldn't want you to be overexcited and say, oh, price of gold, it's going to rise up and it's going to go up all the way. No, this is, from the look of it, from formation of pattern as well, it looks like there may be a risk of it correcting and coming back down again. If it were to rise up, you should look into candles going above that 50 line first, and then it may then pick up in strength to go up to D and then starts to come back down. Okay, let me just go back to the questions again. Okay, am I still away from the microphone? Am I clear? Okay, monthly support for Abdullah is 1458. Okay, all right, that's a very good point, Abdullah. 1058.92. Yes, that's quite logical. That level is a psychological level as well. So you're expecting gold enter oversold zone. Okay, as for me, with regards to trading, I don't quite believe or set in stone with this oversold and overbought, because if you ask yourself, how many times has it been that we have seen in the markets talking in the news about oversold and overbought zones, and still overbuy leads to more buying as well. That has happened. So we want to, as I've mentioned earlier on, we are at a very risky trading situation due to low liquidity as well as geopolitical factors. So we want to actually find more reasons of where we could roughly go wrong, as opposed to how much right can we be in our trading. Okay, well, hence the reason I want you to also be quite careful with, even though you've got your support level there quite right, 1058.92, but we want to look at the possibility of it going up, but only if it's strengthening in its price upwards above the 50 moving average, and it's traveling nicely across, going past psychological levels, and then still we're looking at a risk at the D level before it comes back down again. Okay, value for the fib retracement level 141%. Okay, sure, Zach. The value you mean 141% is 70.7%. So if your C lands at the 70.7 retracement Fibonacci, then you're looking at the D potentially could reach a 141%. But of course, you want to take profit just before you reach a 141. So it's 70.7% for 141% extension in the Fibonacci. Okay. All right. Now I've labeled it right now X, A, B, C, D. Now the most important thing to do is to look at what's that C Fibonacci level. Where has it actually landed? Where was the support at which level of the Fibonacci? Okay, so how do I do that? If I want to look for C, I want to pull from A to B. Okay, it's like ABC, as easy as 1, 2, 3, as easy as ABC. Meaning if you want to look at C, you want to pull A to B. So you are pulling A to B to get to C. So this is crucial information for me. So I want to pull A right up to B, and I want to look at how did the price land? Where did it actually land? Now here it's a very strong, significant level. Why? Because you've got so many touch points here. You've got an exact point here, an exact point there, so on and so forth, and so many ticks, or so many, how do you call that, wicks that have actually touched onto the 88.6 level. Now, the 88.6 level, you've got another formula for that. Okay, now the 88.6 level, okay, 88.6 retracement level, okay, retracement level is well connected to the 1.13% extension level. Okay, what does that mean? That means that the 1.13% level can actually act as your take profit level, your target area, your PRZ or potential reversal zone as well. Now let me demonstrate that onto the chart. Okay. Now, because C landed at 88.6%, if I pull my B to C, I need to look for the 1.13% in order for me to actually predict, okay, where D could potentially be. Now, look at this. This is where 1.13 is, okay? So I've got my D. I've got two potential areas that the D could reach if the strength of the bulls persist, only if the strength of the bulls persists, because we don't know, it might actually just reverse and come back down here, correct? If the bears persist, it might just go all the way down here. Okay, again, there is a potential of another pattern that favors the downside. Okay, but we're talking about for those who are trading or forecasting on the downside, the risk is for it to go up, correct? But even if it were to go up for the goal, there may be a risk of it correcting around the DEA. So it's not a forever upward trend for the gold. It may be a correction. But again, we cannot tell much. We cannot see a lot because we're looking at price-wise 1.076.09. I would think that it's best for us to wait until the price goes further up and crosses above the 50 moving average to then give us a bit of a hint that it might go up. If not, then it might just continue downwards from here. Okay, now we'll continue to make a forecast on where we could actually go down to as well. Okay, so let me just answer some questions first. Impulse corrective. Thank you, Abdullah. I see that it's a little bit of a shortcut to the Elliott wave actually, because the W or the butterfly pattern that I draw is actually the if I'm not mistaken, it's the fourth, fifth ABC wave of the Elliott, you see. So it's a little bit of a shortcut, but if you've got some knowledge of the Elliott wave, it might actually make it clearer for you to use a bit of geometric trading onto your existing knowledge of Elliott waves. Okay. All right, so we've got C potentially up there, but again, we want to only think of the risk first, okay? We want to enter the right timing. So what if prices tend to just start falling again, okay? What would we do then? Now, if I were to pull my, before I pull that, give me a second, oops. I would like to just remove my Fibonacci. A second. Okay, I would like to change that color there so that I can differentiate between this W pattern that I've just drawn to another pattern that could potentially work out. Now, see that AB, there's another potential pattern. Okay. Oops, sorry. Let me not do it this way. I would like to say that B, C, and then it went up. This could come down all the way as well. Now, it could then make out another A, B, C, and then D all the way down, okay? So what that means is that if this is my AB for the new pattern, then I want to put it all the way here. Give me a second. I'll explain what I'm doing. Okay. Why I did that is to predict AB equals to CD for a new pattern, meaning that if prices didn't actually manage to go above the 50, and it's a downward trend, so there are more downward move, and if it does go downward more, then that length where I've labeled it as B to C could could be the same length for you to predict to come down here. So if it were to be a stronger downtrend for the gold to actually fall, there is a high probability or possibility for it to reach that level there. So now you've got two possibilities, but then you've got to wait and look at which whether the bulls or the bears dominate. If the bulls dominate and it goes above the 50 moving average, and you look at the strength from other factors as well, that the goals going up, then you're looking at a potential take profit area at the D zone. If not, prices tend to just fall much more, then you're looking at it falling to the level of 1059.82. Okay. All right. My battery is running low at the moment for my laptop. I need to just plug in the battery so that we don't lose this whole session today. Okay. All right, Priyan Abdullah. Just give me a second. Okay. Like you to look at that again, and just give me 2 seconds until I just grab my charger for my laptop so we don't lose each other. Excuse me, guys, yeah? Just for 1 minute. I'll be back. Okay, guys. I think I'm back. I've just plugged in my battery of my laptop, so it's all okay now. So if there's any question about what I've just drawn, the pattern, the W-like pattern for the goal on the 4-hour chart. Now, the beauty about the geometric pattern is that sometimes we look at this big pattern on a medium or long term like the daily. We might be able to look at smaller patterns to confirm your direction of the trend in smaller time frames. Okay, so if I were to move on to the, let's say the 30 minutes chart. Okay, now on the, oops, now the 30 minutes chart, if I were to zoom in first. Now the trick about geometric trading or any pattern type trading is always try to zoom out first before you actually zoom in, because you would need to look at it at a bigger picture first. Maybe you might miss out a very big pattern. You never know. Okay, so if I was to go on to the 30 minutes chart, as you can see. Now you've got that W, that very interesting W pattern. Okay, it's a bearish pattern. Now, on a short-term time frame, we're looking at prices going upwards. There's a potential because we've got the price above all three lines, but the nature of all these three lines is rather confusing in a way. Why? Because we've got all these three lines tangled up amongst each other. Okay, sometimes as a geometric trader myself, I would like more clear signals on various angles, whether it is the indicators or whether it is the way the prices are moving in a wave, whether it's cleaner. You know, there are many ways of looking at that. Of course, I'll cover all that in detail in the geometric trading series. Okay, and that is where we could go into it deeper. But here I'm just looking at the analysis for gold at the moment on a 30 minutes chart, and if I were to zoom in, I'll be able to look at the behavior of price using the candles, and you can see that, you know, there may be a momentum on the upside. Okay, so for those who are very excited and saying yes, there's a big move of gold, possibly on the upside. But again, I would like you to think of the risk. You know, not to discourage you or anything like that. It's just for you to be safe in this very risky time of trading as well, with so many things going on. Okay, so at least you will understand that yes, you've got chances of it above, but maybe you want to wait a little bit, you know, and if it does go past and you've got a long way upwards, but if it does go up more, you want to also know that D could be a potential take profit area. Okay, but before it comes down, usually the pattern, it might well go up, but then there's a potential of a reversal zone here, which means that it reverses downwards first before going up even further. We never know that, but then this is your short-term sort of plan to know that this is the length of which it could actually go up. Okay, now another way of what do you call that, deciding on the entry level, if you were to buy, you know, whether or not it's good timing for you to enter the market or not, using geometric pattern analysis, there's one very easy way, as I've drawn earlier on. I just want to attach my A right up to D, okay, and I want to look at the center point. It comes up with like a butterfly kind of pattern. That center point is crucial as an ideal entry level, but above that line. Okay, so once prices or the candle has gone above that 1077.45 or even higher and gone above, let's say if it goes above 1077.45 and it starts to build up its length and go further up and goes above the 50 moving average, okay, then you could say that the strength has actually increased on the buy side, and then it would be an ideal area to buy and have your take profit before you reach this first horizontal line. Okay, the price 1090.09. So it's best if you plan to do buy, as I've mentioned, to buy that area, as I've mentioned, and then your take profit to actually be before the 1090.09 area, just to be on the safe side, and re-enter your buy only after if actually prices have gone above the 109085 area and it starts to build up, then you could potentially look into more buying. But then we want to take it step by step. Okay. All right, I hope that's clear on the gold side, especially for Abdullah, because you were very curious and interested in the gold of your own. Okay, let's see whether we've got any questions. Right. Now, if you guys have got any more questions, feel free to ask me again. Okay, I'll be happy to answer them. Now, just a matter of curiosity, I would like to also go into oil as well. Now, based on the daily chart, as you can see, there was an M-like pattern. So I was actually trading from C to D. That's my C to D leg. That last red leg that I've actually drawn is the C to D leg. So I was trading somewhere between C to D and I took profit. And because it's an M pattern, the M is a total opposite of the W pattern. Okay, which means that M is a bullish pattern, meaning once the M pattern have actually completed at D, there is a likelihood or probability of prices going upwards. And that's exactly what it's doing now. We've got an upward move for the oil. If we were to go onto the hourly chart, we could see that yes, there's some strength on the buy side, correct? And same for the hourly. But on the daily, I just would like to see a clearer picture. As you can see, the C landed at 70.7%. So as mentioned, the D could likely be at 1.41%. Okay. Just before I show you on the Fibonacci, let me answer some questions first. What is the exact value? 141. Okay. Gold, you're happy with that, Abdullah? That's good. GBP got into its all-time high. It's a very good question, Fidela. We'll look into GBP right away. AUD USD will break level in daily chart. That's a very interesting observation, Mohammed. We will look into the AUD as well. There's quite a strong relation between what's happening in gold and what's happening in the pound as well. Okay, to the Australian dollar. Okay, we need to look into that correlation as well sometimes. Now, correlation will work to some extent at a certain point of time. Doesn't mean that it will work all the time, because things can actually change correlations at any moment of time. Okay, so let's look into a little bit of what Fidel mentioned about GBP as well. But just before that, let me just look into oil. Some of you are trading oil or use oil as your sort of indicator for the other instruments, let's say, okay, or to simply give you an idea of what's going on in the market in terms of whether it's a risk on or a risk off kind of trading environment. Okay, but I would like to just firstly delete all this noise that we can see here, the red horizontal line, so that it's clear and nice. Okay, as I mentioned earlier on, we need to look at the C. This is my C level here. Okay, this is my A, this is my B. Okay, so when I pull the Fibonacci retracement from A to B, I'm able to look at where C roughly landed, or close to which level. It looks like it's the opening closing price is at the 61.8 level, and it's very close to the 70.7, but it didn't actually touch that level. So let's say we take the 61.8% as the level where C has actually landed. So usually what happens is if C has landed at 61.8, okay, let's see. Usually if C landed at 61.8% fixed retracement, yeah. Now the D could potentially be targeted, or take profit level could be close to the 1.618% extension level, okay, fixed extension. So I'll just write that there. All right. So let's look at C first. Now we know that that's C. Now we have actually seen C already. Sorry, apologize for that. Now, so C, let's say it's at 61.8. So now what we need to do is we need to sort of predict. Oh, of course, this move have actually happened. So we need to pull from B to C and look for the 1.61%. As you can see, it didn't actually touch at 1.61%. It actually went to the 141 area as well. Now, the reason that's where the risk was, because as if you remember correctly or rightly, I have pulled that one here, the A to B, to look at where C is, and it was quite close to 70.7%, but it touched 61.8% and didn't actually touch 70.7%. Okay, so we need to take that into consideration sometimes because prices were between the two lines. So we can always say that it could be between 161.8% or 141%. Why 141? It's because if C, let's say, as mentioned earlier on, if C touched at 70.7% FIPS retracement, okay, then you could potentially forecast D to be at 1.41% extension. Okay, all right. So that's a little tip right there for you guys. Okay. Of course, this webinar is recorded, so you could watch it over and over again. Once we have done that, downloaded that and sent it, uploaded it onto YouTube, you'll be able to see it, and you could play it over again to look at all the extension versus retracement levels and things like that. Okay. So once more, if I pull from B to C, has landed sort of on the dot at 141%. Okay, so to take it safely, if I was to trade from C to D, I would like to take into consideration the 141% as well. So that means before prices have actually reached either the 141 or 1.61%, I would have exited just to be on the safe side to take profit early. Okay, so C to D. Where would I actually have sold if it were to be C to D? I would simply do that simple move of attaching that line there, that end to that end, look for the middle, okay, right there. So that would be your safe zone under that horizontal rate line would be your sort of ideal selling point, and then you are targeting take profit below just before you reach a 1.61%, 618% or the 1.41%. Okay, I've got some more questions coming through. That's great. Okay, you don't consider FIPS retracement 1-3. From years of trading with geometric pattern, I sort of have got favorites. Maybe it's not the right thing to do, but it has actually performed very well on some of the Fibonacci level that I've given you the extension wise. So not really on the 138.2%. No, I actually use the 161.8% a lot, as well as the 141. And also the 113%, the 1.13% or 113% extension level goes very closely with the 88.6% level. Okay, all right. Is it zigzag indicating help with drawing geometry to avoid manual error? To be honest, I've heard of the zigzag. I've also applied it a couple of times, but I find it when we draw manually, I learn much more, and I could teach much more using manual style trading. And because I conduct a lot of workshops as well, I like to see traders draw it manually and avoid using too many indicators, so that they're not only closer to the price, but from a psychological perspective or psychology perspective, I like to encourage traders to be active on both hemispheres of the brain, the right brain and the left brain. So if you've got a lot of drawing involved, as well as a lot of calculation later on, and then a little bit of analysis on the fundamental, hence the reason I use my PRICE trade plan. So I've got a trade plan that combines different method, whether it's a bit of mathematics, a bit of drawing, creative side of the brain, and also a bit of analysis using fundamental and geopolitical factor, but how do you summarize this effect and then put it all together. So I prefer, it's because of my method of trading that I prefer, because this would encourage traders to have more discipline as well, because you've got sequence of trade, and if you are active on both hemispheres of the brain, it puts you in check of your emotion side of things. It keeps your brain a bit more, busier. So hence the reason I do it that way. Okay. Okay. Yes, of course, Fidela. Euro JPY. Yes, everybody's asking the same question, isn't it? Downtrend, has it reversed, uptrend, what's going on with Euro JPY? Okay, now Euro JPY, I'll give you a little tip about Euro JPY. You know why? Because it's my favorite pair to trade, the Euro JPY. The reason being, it's got its personality. It's correlated to quite a number of pairs. I think you could say it's closely correlated. Of course, from time to time it changes its correlation ratios, but it's correlated to up to about 8 or 10 nice pairs to trade. Of course, some of the pairs are quite high in terms of its volatility, but it gives me some ideas to spot patterns in different pairs. And another tip for Euro JPY, it's best traded on a Thursday. Why? Because from experimentation, I find that also it's published in many reading materials as well, that the average movement of pips rises. So you've got rises on a Thursday, so you've got more potential to reach your take profit level, or to see it move more as though it is actually active on that day much more than the other days on a Thursday. Okay, so that's a little tip for you guys for Euro JPY. We're looking at Euro JPY on the daily chart at the moment. Okay, whether it's up, whether it's down, let's see, Fidela, what's going on with the Euro JPY. First of all, for those who've not actually seen me insert the 3 indicators, this is your chance now to look into how I actually insert the 50. Okay, I always make that my first step, just to check on the trend first. I don't use any indicators to actually look at crosses or anything like that. No, I only use indicators for just to confirm the trend direction. Okay, it gives me a bit of a hint or a clue of the direction. So I start off with 50, and I like to start off with the lightest color possible. Okay, so I know that that's my 50 there. Okay, I'm just doing it the long way, so that for those who have missed how we insert indicators, you can actually look at it clearly. Okay, then I've got my 100 moving average. I'll put it at slightly darker than the first line, so I know that's my 100. Okay, and then my last one would be moving average again, 200. Okay, but it's all these lines that I'm applying are the exponential moving average. As you know, the moving averages, you've got many types. You've got the method that's applied to a simple, smooth, or linear weighted. It all depends on the strategy, but I just prefer exponential. I just want to keep it that way. Some people prefer the simple as well, but there are probably some differences of how sharp it is, maybe some adjustment. Okay, so I've got my 200. Now we're looking at Euro JPY again. Okay, we're looking at the daily chart, and prices are indeed on the downside. Okay, they're on the downside big time because they're quite far away from the 3 lines, and as you can see, the 3 lines, or the 3 exponential moving averages, are actually splitting apart and quite far from each other. That's a good sign. That gives you an indication that the trend on the downside could be quite strong. Okay, so we're looking at a 4-hour chart again. If we were to look at that, now look at the nature of how the 3 exponential moving average travels. Again, they're far apart from each other. They're traveling downwards. The candles are very far away from all 3 lines. So again, on the 4-hour chart or the medium term, it's again showing favors to the downside as opposed to the upside. Okay, I think I've got some questions coming. Give me a second. Why EMA and not the simple moving average? That's a very good question. It does depend on strategy as well, but then a lot of traders, including myself, we think that the exponential moving average, the mathematics or whatever you call it, the formula behind it, makes the line closer to the price. Closer to the price, meaning that it's a bit more sensitive as opposed to the simple moving average. Hence the reason we use it. But again, don't get me wrong, some people will apply the SMA only because it works very well with their strategy, even though it may not be as sharp, but we're looking at very minimal difference between the two anyway. Okay, so don't worry. What you could do though, Adrian, is you can actually experiment the two, put them side by side or put them, on different chart and compare price movement between the EMA and the SMA, and you see it for yourself, whichever fits you best. You can apply that. Okay. Okay, so we're looking at the Euro JPY. So that's for the 4-hour chart, and if we were to look into the 1-hour chart, you could see again it is signaling a downward move, okay, stronger than an upward move, okay. The reason being the same as you have seen the 4-hour chart and daily chart, the three EMA or exponential moving averages, they're actually quite far apart from each other, traveling downwards. All the candles, majority of the candles are actually under all these three lines, and they are moving quite far away from these three lines, and they are moving downwards. So to answer your question in terms of trend, Fidela, it's very much onto the downside. Okay, and if you are looking at how far can it actually go, then we want to look at patterns to determine how far could it go, or where could we take profit if it were to be the selling position that we're taking, and things like that. Okay, I think I've got more questions. Do you have a site where we can find your system explained on YouTube? Okay, there's good news, Zach. We have just launched the FX training series. So I'll be launching through Orbex itself, because we're exclusively using geometric trading as our strategy as well into the FX training series. So you are now in this introductory beginner series, correct? So I think starting of the year in January, we'll have a 4-part series that specifically goes into geometric trading, and that will be a very interesting session, I assure you, because each one of it will guide you into spotting the patterns, the geometric patterns, how you actually determine whether it's high probability, low probability, and all other things that's got to do with how I'm trading until today. So definitely we've got that, and that's through Orbex. You'll be informed via Orbex website and be sent an email once the date has been actually confirmed. Okay, and the best part of it all is at the end of that 4 parts, you will get a certificate. Okay, and I'll be at your service at any time to answer your questions as well. Okay, all right, Zach. Okay, Vitaltis sound. I was not aware of that, Vitaltis, about me experiencing technical difficulties. Is it still going on now? Can people hear me or not? So I'm not sure. I don't see any. Oh yes, audio. Yes, thank you for reminding me. Let me just make sure that perhaps I was the one who tilted my mic a little bit. Okay, I hope it's okay now. Oh, it's weird, is it? Okay, right, let's see. I'm not sure why though. Okay, let me just. Okay. Is it any better, guys? Brilliant, Vitaltis. Thank you very much for confirming that. Okay. Has the GP got into its... Oh, yes, Fidela. Give me a second. Okay. Let's look into the GBP, guys, here. Right. The pound. Okay. There's a couple of I've been trading the GBP, to be honest, and yes, I've taken quite good profits from the downward moves. How far will he go down more? Let's start as how we've started earlier on with the other pairs. To answer your question, they may be. I mean, it's looking like the downside is favored more, okay, because you see, if I were to compare time frames, I'm looking at prices. Always start with the trend first, just to look, just to be in the safe side, whether it's on the downside or upside. It looks like all three time frames giving you some hints on the downside more, but how far more? That's the question. Okay, so if I were to go onto my 4-hour chart, first of all, as a patterns trader or geometric patterns trader, I would like to look at patterns first. I know that it is actually more on the downside, so I'm going to look at A, B, C, D, or any other pattern that would favor the downside move. Okay, let me just clear some of the indicators that I have, or objects that I have. Okay, let's just do this. Let's just clear it all out. Okay, now it's clearer. Now, now that if I were just to look at that move here, that peak there, all the way down, okay, and then it corrected itself, and then it's on the way down again, okay, I could easily say visually that that could be my A up there, and then the B here, C there, and then we're predicting a downward move on the D. Of course, we don't know where D could actually go. That was the question as well. Okay, so let me do this. Let me first pull my A, potentially A peak, right down to my B, because it's crucial, as I've mentioned earlier on, to know where did the C go. Now again, the C have actually the highest peak also have been in between 61.8%, 70.7%. Okay, so before I do anything else, I would like to label it and draw out the pattern first. Okay, got it right there. Okay, that's my A to B leg. Okay, let's say tentatively. I'm more interested in a downward move at the moment, taking selling positions still on the GBP USD. Okay, mainly because of the trend. But the big question is, until where would it actually fall to? This is why we're drawing the pattern now. Okay, so I've got my A right there. All right, now that's my AB leg. Okay, so my B is there. So that completes your first leg. Sorry, first leg of the A to B move. Okay, so you've got your A to B move. Now, prices fell downwards, very strong indeed, with big long candles reaching B and then correct itself up here. So B has moved upwards towards C. So that's your C point there. Okay, so I'm just going to label it there. That's my C. Okay, and I'll just draw B to C like that. So I've got two legs, A to B, B to C. Okay, now you're predicting the move from C to D downwards. How far can D go? So we're actually predicting the D at the moment. Now, how did we actually do that? Remember, I've mentioned AB could easily be equal to CD, potentially or probably. Okay, so I'll just double click that. I'll move that all the way down there. Okay, just make it clearer, move that upwards. Okay, right. So I'll just redraw or put that line back, the AB line. So I've got AB, I've got C. So where could D go? D could go potentially at the end, that line here. Okay, potentially again. Okay, so then I draw that line there. So if downtrend were to persist for the GBP USD with all other factors taken into consideration, the fundamental side of things, geopolitical, you've got news releases, BOE comes into the picture or whatever that is, right? And it pushes the price downwards. Potential of that would reach that area here, 148632. We don't really bother what would actually happen then. Would it actually bounce back up or go all the way further down? We wouldn't know. But what we would, as traders, know that for that span of time from C to D, we could potentially take profit at that level there. Okay, so remember what we've mentioned earlier on, that the C landed at between the 61.8 to the 70.7. Okay, so that again will give us an idea of two lines because it landed in between. So again, you've got an in-between target of 141, okay, as well as 161%. Okay, now I'll take that Fibonacci off. You've got three lines, correct? What these three lines mean is that if prices were to fall further, okay, you've got the potential of having these three, any one of these three lines as your potential take profit zone. Okay, but of course, to be more conservative, if you are on a nice fall of prices and you are on a run to take profit, you know, try to control all temptations to leave it to run. What I mean by that is for you to be able to take profit before prices reach any one of these three red lines, just to be on the safe side. But again, as long as you're in profit for that, I would guess you'll be happy. Okay, so that's basically where prices could end up at, if I have answered your question there, Fidela. Okay, so I'll just mark that this area in blue, that's your potential take profit area. Also reversal zone, meaning prices could come down, could reverse at any point there. We can only take a look at the prices for the forthcoming days and weeks and see whether or not that could be what could happen. Okay, let's see. What is the chance in percentage of AB to be plus CD? That's a very good question, Zach. Now, the percentage wise, I could not put it in numbers, but I could say that it could be either high or low probability depending on your C point. Okay, depending on your C point. Now, if the C point touches on the dot of any one of the Fibonacci level, like the high probability one, like 61.8% or 78.6%, then the percentage heightens up for the AB to equal CD. But from experience, usually the AB, if your AB is quite close to the 61.8 sort of percent, then you know you can get that C to D to be quite high probability. You know, especially the 61.8% and the 78.6%. But you can always experiment that a lot. And to be very honest, you have got some pairs that the AB equals CD happens a lot more, and that is one of the reasons why I've mentioned about Euro JPY and some correlated pairs to the Euro JPY, like the GBP, JPY, for example, or the other pairs. I'll share with you a table. You can actually get it available on Google as well. Just type in Forex correlations, and there are various sites will just give you an idea. It's not set in stone, it's not 100%, but you could see for each pair, which pair is it correlated to. Okay, so the AB equals CD can actually work for certain pairs better than other pairs, but it has worked for me quite a lot over a number of years going back as well. But again, trading geometry does not actually only mean technical, okay, for me especially. So I don't really trade, as you see. I'm showing you the technical side of it, but before I see a pattern as high probability, I've got a checklist, I've got a trade plan as well. So that is what I would like to show you in detail, but of course that will be in our next trading series under geometric pattern, and it will be a very interesting session as well, because we've got lots of checklists to do in order for us to lower our risk and heighten our probability. That's all. That's what we all want. We want to be in a high probability, low risk trade. Okay. All right. I hope I've answered your question on that. Okay. What is the extension from 78.6? That's 78.6%. That's a very good question. I'll just type it out here. For the 78.6%, second, FIBS retracement. Usually the D, you could expect it to be at 1.272% FIBS extension. Okay, I'll send that to all. All right, that's a very good question, Vytautas, because there are some traders out there, including myself, we can be sometimes quite conservative, meaning that we don't take all Fibonacci retracement into consideration. Some of us are very strict into only considering the 78.6% or the 61.8% only, let's say. But as for me, I do get flexible depending on the time of the year to trade. As you know, we go through time of the year that is either high in volatility, high in risk, whether it's a risk on or risk off environment. Like I've mentioned earlier on in this webinar, at this moment of time, it's fairly risky time, meaning that you've got very low liquidity, plus you've got geopolitical factors. So considering that, I would be more conservative, meaning that I would only look at my C point to be at the 78.6% or the 61.8% only. That means I would ignore other trades that even the C is on the dot at 50% or 38.2%. I might not actually take that trade just to be on the safe side, so that I could increase my probability in risky times and while reducing the risk. Okay. All right. Hope I answered that question. Do I trade 76.4%? Not really, Vytautas. It's 78.6 that I do most of the time. 70.7, yes, but 76.4, not really. I'm not really sure on the 76.4%. There may be a mathematics to it, but I have plotted it based on back testing and testing manually, loads and loads and loads of chart, and looking at what's high probability. So that hence I picked, cherry picked the ratios that I like, that have actually given me good results. Okay, good performance. Okay, so the 76.4%, maybe it's used for harmonic traders for certain types of pattern, like the bat, or maybe some other patterns I'm not sure about, or the shark pattern they call it. They've got loads of names of animals for a lot of patterns, but I try to make it simple in calling it M pattern or a diamond looking like pattern. So it's not that fancy of a name. Okay, which time frames? All right, brilliant, Adrian. That's a very good question. For geometric pattern trading, like what I do, the beauty of it is that it could be traded in all time frames for any instruments. And I bumped into geometric trading, for example, trading oil at the very beginning, and a little bit of stocks, but mostly commodities, a little bit of equities and stocks. But then I now transferred that after tweaking it a little bit onto currencies mainly. So it's mainly currencies, a little bit of gold and all that I trade, but mainly currencies now. And all time frames, all instruments. Yes, definitely. I have 3 lines at the bottom of the screen. Yes, that's has been highlighted by the blue colored box as well. How do I define them? Yes, There's a whole process to that actually, Zach, because it's a bit of a long process, but I promise you it'll be covered in the next series under geometric pattern. Because it's a whole trade plan. But to make it really simple for you, one of the lines is actually AB equals CD. The second line is actually the Fibonacci ratio based on extension, but you need to look at where C is to know where D is, and then that is one of the lines. What other lines they are? Yes, mainly these are the main ones. I've drawn three of them because the C was actually in between 70.7 and 61.8, so hence I've also got two extension possibilities. That's why we ended up with three lines. But with trading geometry, and if you want your probability to be higher, usually if I were to trade, I've got a minimum of 4 lines up to about 5-6 lines, because I put in the support and resistance analysis into it as well, and just to redefine them properly so that we know where the risks are. Okay. Okay, ABC correction, yes, Vitalis, that's exactly what you can use it for as well. But then from using geometry style trading, you could easily use it to reconfirm your Elliott wave, you know, yeah, it might even simplify the process of you trading Elliott wave, because Elliott wave, you know, as interesting as it is, sometimes I find, because I've tested and experimented on it years ago as well, before I bumped into geometric style trading that I've tweaked myself. I find it highly subjective at times, you see. So of course, you know, you can always retweak it or simplify it, and using geometric trading to confirm it, and so on and so forth. Okay. Yes, there's a question by Fidela which I've missed. I'm sorry. Why is it difficult to predict the sea? And that information exclude. Yes. Okay. No, I'll actually explain that to you, Fidela. You know, it's a very good question, and that's one of the things that have drawn me into geometric trading for many years. 8 years now that I've been trading geometric style, and I'll explain to you why predicting C is that you know, it's difficult as well. It's not really difficult. It's actually a matter of choice whether you would like to trade, depend on the formation, whether you would like to trade B to C or C to D, and why is it that you don't want to trade, or why should you not trade B to C, only C to D, and things like that. But I'll give you a very simple explanation. Give me a second. I would like to use the, it would be better for me in a second to use the paint. Second, just excuse me. Maybe I'm not able to do that. It's okay. All right. Let me draw that. Let me draw that onto the chart. Sorry about that. Okay. Let me explain that a little bit. Okay. Let's see. As for me, Fidela, I like to look at a simple formation that I call it the M and W pattern. Let's start off with the M pattern. Okay, so you get what I mean. Let's say that I've got an M pattern that looks like this. Okay. Now, this M pattern that I've drawn is not the same as the pattern as the letter M, capital letter M that we learn at school. Okay, this is a pattern that has been detected, let's say, inside in within the financial industry onto the charts. Okay, of course, a lot of people would call it. There are many names to it as well, many types of patterns. You've got the harmonic M pattern. You've got the sharp M-like pattern. You've got the back. You've got many types. But let us just simplify and name it just just the M pattern. And let us just label that here. Okay, I'll explain what the big boys could potentially be doing. okay, because I've been I had the opportunity to bump into some people who until today trade geometric or harmonic patterns, and they have actually sort of explained to me that's not B right there. B is here. Okay. Let me just use the letters that are already ready here. Okay. Okay. I'll just do it that way. D. Right. Now, I'll just explain using this illustration on the M pattern here. Okay. So, why did I delete that? Sorry. I see. Okay. So let's say this is an M pattern, okay, and it's usually called a bullish type pattern. Why? Because once C has traveled to D, it's usually forecasted for it to rise up, okay, for it to actually go up. So let's say I'm going to change the color just to show you that that's an upward move, okay, all right. Okay, let's say an upward move, okay, and an upward move to E, let's say. Okay, let's say that's E. All right. Okay. Sorry about that if I'm taking too much time. I'm a bit of an old school guy. I like doing it manually. All right. Okay. Okay. So let's say D to E. All right. Now, as for me, Della, I trade only the C to D leg and the D to E leg. Okay. It's difficult, as you have mentioned it rightly, to determine exactly where the C would have actually begun. Okay. But I'll give you this simple illustration of a story. Okay, let's say that you've got all the big banks. The big banks have created some kind of news or some kind of action that has given a lot of people in the retail world to think that prices are going up from X to A. Okay, so prices went up, and this big move is usually created by the big boys, the big banks, as you've mentioned rightly, Wall Street, or whoever that may be, or hedge funders, or anybody else. Okay, they created something, they go into a buy, and they have created that. Now we as small traders, including myself, everybody else in the retail market, is not even detected into the forex radar, okay, of things. All right, now they have created that big move there. Now, if you were a bank and you have got the mind of a bank, you would know that if you have created that M-like pattern, at the end of that pattern, there will be again a rise up. Okay, because so you would somehow still benefit because that A, B, C, D is a corrective move of that big move. Okay, sort of like a plan that they have, whether it's real or true or not, I don't know. Okay, but let's say that is a corrective move of that big move. So you've got the banks, to cut the story short, you've got the banks who have created an upward move, but when the prices have actually fallen, they make all the retail traders sell, let's say, and they get really excited and they sell, and they may think that it may go way below and it is time to sell because it was a very big move up there. Okay, so it's time to be overbought and it's time to actually sell. But little did they know that there is a little plan of action by the banks to actually reverse price there. And usually if you've got an M-like pattern, that's what happens, D to E. So me or some of the traders, geometric traders or harmonic pattern traders, let's say, they prefer to be conservative in some way, not trading B to C, but trade C to D and D to E. Okay, so the reason why I've experimented a long time ago in drawing a line at A, from A to D, and then look at the center point, and that could be your area. It's just a matter of luck, really. I came up with a method as such where it does actually hit on some very significant support resistance level as well and things like that, and it has actually worked for me. So hence the reason it is difficult, as you've said it rightly, to really trade from the very beginning of C as well. And to be very honest with you, if that's the way that we can predict it, it would also be very risky to trade at the very beginning, because we would like some strength of the fall of prices to show itself, and it has actually gone past some resistance. Only then we want to actually enter. So that is the formation or the pattern, an M-like pattern. But to be honest, the big moves usually created by the banks, but they have got a plan of covering up there, because if they were to create the momentum of buy, making people believe that there would be an overbought there, but then you've got price coming down, but why is it that you've got correction there? So wouldn't the bank actually benefit from not only the XA move, but the BC move and the DE move? So they would be actually benefiting 3 times more than what the other participants of the market would actually be benefiting from. Okay, that's probably just a theory, but every time we look at an M pattern as such, where the D leg is shorter than the X leg, and the C hunch or the shoulder there is actually lower than the A there, that kind of a pattern usually will see prices reverse at a certain level at D, and it goes up to E, and E could also be predicted to always be safer to take profit under the B level as well. So there are ways that we will draw it out, okay, in the following FX trading series of geometric trading. Oh, away from the microphone again, Vitalta. Sorry about that. I'm trying to actually hold my mouthpiece here. Okay. Hopefully when the recorded version could be clearer, I hope. Okay. Is that all right? Thank you, Fidela. Okay. Fidela, has that been covered for you in terms of your question earlier on about the big boys and things like that? Okay, stop loss. Very nice. Yes, thank you, Fidela. All right. Vitalta's question about stop loss for the trade from C to D. Okay, for me, trading the geometric pattern style, I have kept the stop loss a little bit simpler than plotting it onto the chart, meaning that I have adopted the 1-to-1 risk ratio. So it does depend on the amount of pips in profit. I equal that to my stop loss level. So if my profit level is 100 pips, sorry, or 80 pips, let's say, then I would have 80 pips as my stop loss as well. But again, it does depend on the probability level. You see, that is why I focus a lot on how high is the probability of the pattern and how low is the risk of that. Right? Okay, that is on Vitalta's question and ABC correction fee. All right, I think I've covered that. All right, so I think I've covered most of the questions. Do remind me if I've actually missed anyone's question. I'm looking up at the moment on the list of questions. Okay, I think I've answered most questions. Right. Sure, yes, I will definitely shed more light on the C prediction. Not a problem at all. Yes, sure. Usually I would like to trade from the C onwards and to target D. Usually I only trade the C to D leg and the D to E leg, and the C to D leg I would be very truthful to you in saying that for the past many years the average number of pips that you could gain minimum would be about 80 pips from C to D, and it's about 50 pips or so for the D to E, that's the minimum. So in every one pattern that's high probability, you've got a potential to gather up 140 pips per pattern minimum. Okay, but again, I focus a lot onto the risk side of things, so I would love to shed more light on high probability and low risk trading as opposed to just trading and getting the pips. But I like to focus on the risk side of things so that you know where you could go wrong, so that the profit side of things could take it, could take matters automatically. I mean, the profit should come as an end result, of measuring your risk. Okay. Main patterns, yes, you can say that is M and W, but then from the M and W itself, I have tweaked it to be more geometric, where I actually combine all the lines together, so it becomes like a kite-like pattern or like a diamond-shaped pattern, only because it helps me determine my entry and all that with simple drawings. So yes, you can say the base of it would be the M or W like patterns, but I have tweaked the Fibonacci ratios around. So I don't have a name for many patterns that I trade, but I can say that the basis of it would be the MW, but you would see a lot of squares or kite-like shape pattern onto my chart. Okay, all right. That's another question here. When the price crossed the horizontal, this is a question by Zach. When the price crossed the horizontal line drawn on the cross point of A to D, yes. Do you open a position? You wait. Okay, that's a very good question, Zach. There are checklists that I do, even though after I've crossed that line and I've got that cross point of A to D, I still look at psychological levels. Okay, I look at the price as well. For example, we're looking at GBP US dollar. Okay, and I've got the price as I see it now, 1.5071, or let's say 72. Okay, now 72. The last two digits is 72. Now 72 is only about 8 pips away from the psychological level of 80. So 72 is too close to 80. So I'm not actually going to trade at all based on that psychological number. Okay, usually if it is, let's say, I would like to only trade a sell or selling position, adjust the numbers only if it's under 80, meaning that if I was to sell, I would prefer to sell at 1.5070, not at 1.5080. Why? Because the last two digits, if it were to be 00, 20, 80, or 50, these are very significant psychological levels. Okay, so I would like to trade under it or above it. So there are ways that I will detail it in my next series, where if you attend or sign up for the geometric trading series, it will be covered onto the trade plan, on how you can actually plan. What are the areas you look into before you determine your entry, and there is a checklist to it too. Okay, all right. Okay, thank you for that, Vitatus. I appreciate that. Book on Forex that rookies. No, Fidela, but the good news is that hence the reason for us to start this very interesting FX training series. Okay, so hopefully this series will come up with archives and archives of video that will have my voice. Hopefully it's pleasant to actually explain to you step by step on how to trade using this method. And not only that, I would run series on Fibonacci as well, on proper way of using Fibonacci, interesting ways of using Fibonacci, or ways that works practically. Okay, so yes, hopefully we're in that path of producing more videos, but definitely more ebooks as well to go with the videos, actually, Fidela. Definitely. Yes, we're working on that, and I think at the start of the new year onwards, from January onwards, you would be happy to notice more and more training materials and videos would be coming up from the FX training series of Orbex. Okay. All right. Yes, and I would like to also include my email. Okay, I'll just give you my email, which is Kenny. Very simple email, kenny@orbex.com. Okay, and I would urge every one of you who have attended this workshop with me, this webinar, sorry, with me tonight, to send me an email with any questions you have. Now, if you want to screenshot your chart of your current strategy and get my feedback on it to advise you further, feel free to do so. You can send me an email anytime you want. I'll be happy to help. Okay. All right. If there are any more questions, please carry on with them. If not, then we would maybe see each other again, and this would be the end of this webinar. Okay, I'll just wait for about a minute or so if you've got any questions. Yes, sure. I'll be very happy to run a Scientific FX pivot points series, and it's very interesting. Yes, actually pivot points can be applied to geometric trading style, but it's just that it needs to be tweaked a little bit to apply the support resistant side of things as well. Because support resistance, quite a number of people are drawing the support resistance line, but there are other more effective ways of drawing it, and I will be happy to share them with you. Yes, of course, Zach. Not a problem at all. Be happy to do that. Please check out the Orbex website, orbex.com. If you scroll to the very bottom, you'll see all the webinars that's posted or future webinars that will be posted, and you'll be kept posted on all future events as well. And if there's anything you need to know, like I've mentioned, email me. I'll be very happy to help as well. Okay? All right. With that, I think that could be potentially, probably, like trading. The last question there from Zach. And with that, I would like to end this webinar. Last but not least, for me to say a very big thank you for those who have attended this webinar tonight. Appreciate it a lot. And we will see you in the next webinar. And have a very good night, everyone. And thank you again. Bye-bye.